Everybody, Darren Garman here, and welcome to this episode with Trot of the Heartland Multifamily Show, the place
for all things multifamily.
That was good, man. For all things multifamily, and I'm excited. We're excited about this episode because this is part 2 of our Defcon cycles episodes, or Defcon cycles in terms of where we are in the multifamily space right now. Commercial property space, Defcon cycles. We recently talked about Defcon 3. If you've not watched the Defcon 3 episode or listened to the episode, you should do that first. It's not mandatory, but you should do that first so you can get an idea what we're talking about regarding Defcon cycles. Okay, why they're important to multifamily and commercial real estate, and why we find many owners, many properties, many loans in those Defcon cycles. So if you've not watched episode number 3, make sure that you watch Defcon 3 episode. It would be good foundationally before you watch Defcon 2 episode, which is this episode, right? And before we jump into Defcon 2 and why this is, man, we're going to cover some serious ground on this episode, by the way. Welcome to the Heartland Multifamily Show, the shorter, more profitable path to multifamily ownership and investing. Make sure you leave your comments below. Would love to have some dialogue with you. Click that subscribe button if what we talk about here resonates with you and you do not want to miss out on any future episodes we have here at the Heartland Multifamily Show. Okay, Defcon 2, Trot. So we talked about Defcon 3. So by way of quick review, Defcon 3 is what? What is Defcon 3?
It's essentially you get to the office, you understand that, or you realize you got a problem, and now we're going to try to find a solution to that problem. In multifamily, we're thinking liquidity, cash flow issues specifically. I mean, there's Defcon 1, 2, 3 in any business, but strictly multifamily, we got some sort of issue. And in this case, it's liquidity or cash flow issues.
Right. Yeah. So Defcon 3, I'm going to repeat what you said. You basically come to the realization is we got a freaking problem here. We have a liquidity problem. We have a cash flow problem, probably both. And now we have to implement a plan to deal with that problem. Okay. So Defcon 3 is realization, plan implementation of dealing with your liquidity and your cash flow problems. Okay, that's Defcon 3. So nice job. But now, how do you get to Defcon 2? Well, how you get to Defcon 2 is Defcon 3 didn't work. Okay, so you hit Defcon 3. You've realized you've got an issue. Liquidity, you've got a cash flow issue. You've implemented a plan to deal with it, and that plan is not working. Okay. If that plan doesn't work, do things get better, Trot, if your plan doesn't work, or do they get worse if your plan doesn't work?
There's no possible way this could get any better if you come down to Defcon 2.
You're now got a really big problem. Your big problem has turned into a bigger problem, so now you move to Defcon 2. Here's what happens in Defcon 2. Now you are forced to do 2 things. One is you're forced to contact your lender or lenders, and you're forced to say, hey, we got a freaking problem here, and we really need some kind of help, whether it's delaying payments, whether it's doing some kind of deferred interest, or maybe interest only, or a plan of some kind. There's got to be a plan with the lender, and you're putting the lender on notice that we have a freaking problem here. We need your help. We need your cooperation to deal with this. Now, why isn't this part of Defcon 3? A lot of times you think, well, why haven't you talked to the lender about this before? Well, Defcon, when you talk to a lender, it puts them on notice that you have a freaking problem. And one of the worst things you can do, you want to try to avoid as much as possible, is let the lender know you got issues. Because once you do that, the proverbial cat is out of the bag, and they look at you and your company and your assets in a totally different way now than they did before you mentioned this to them.
Well, then they start going through, whatever contract you have with them and trying to find a way out, because now they know there's a problem.
Yeah, and they know it's a problem, and now it's let's look over the mortgages again, and let's look over all of let's dig into this deeper, and now we've got to be ready as a lender in the event we have a bigger issue. So you want to avoid that all the way up until you get to Defcon 2, but when you get to Defcon 2, you got no choice but to now recruit that lender to try to help you really start to mitigate some of that fallout from your liquidity issues and your cash flow issues. And it could be a number of things. And, this isn't going to be an episode where we dissect what each of those things could be. But it's basically saying, lender, we need help. We need help with our payments, with our cash flow, with our liquidity. What can you do to help us? Because at the end of the day, the lender doesn't want you as an owner or an investor to have any kind of default, any kind of foreclosure. I mean, that's, the lender doesn't want that. And so they'll do what they can to help as long as it's in their best financial interest in terms of the path that they choose or paths that they choose to help you. Okay, so that's part of Defcon 2. Part 1 is you get in touch with the lender and say, hey, we got a problem and we need your help. Part 2 of it now you got to contact your investors if you've got them, partners if you got them, and you got to let them know what's going on. Okay, now you may have done a little bit of this in Defcon 3, but now this is put the brakes on distributions. Okay, put the brakes on any improvements. Put the brakes on any kind of future cash flow that the investors may be expecting that you may have said is coming, at the end of the next quarter or at the end of the next year. Now you got to put the brakes on the distributions, and you got to let your partners or investors know there could be a situation where we may be asking you for capital. Okay? We may be asking you for capital. All right? So not only are we at Defcon 2 letting the cat out of the bag for the lenders, we're letting the cat out of the bag now for the investors and our partners too. That's what happens in Defcon 2. Now they realize there's a freaking problem. Okay? They realize that, oh my God, not only am I not getting distributions, I might have to be asked to put more money in order to keep things afloat. Okay, so Defcon 2 is ugly. Defcon 2 is ugly because imagine how stressful it can be to not only be balancing lenders thinking you've got idiocy going on at your place with your properties, with how you are doing things, but now what kind of attitude, what kind of impact do you think this has with your investment partners? Substantial once that happens. But when you're at Defcon 2, you really don't have any choice but to do that.
Right.
Yeah. And so, but at Defcon 2, you basically have to do all of that. You have to do all of it. Okay. So let's kind of come full circle here. Right. So let's go. Defcon 3 is you're doing everything you can in the background, behind the curtain, so to speak, to get everything back to where it needs to be. That has not been successful. A few months go by. Now you're at Defcon 2 where you're like, oh man, I got no other choice. I got to talk to my lender. I got to have them work with this. I got to talk to my investment partners. If you've got them, they've got to work with this. We're not doing any distributions. And we may be asking for some capital from you. Okay, so what do you get from this as an investor watching this? What do you get from this as an investor listening to this? Okay, well, number one is now you recognize when a company or companies are in Defcon 3 or Defcon 2. Defcon 3 is not so recognizable because that's kind of behind the curtain that you really can't see what's going on, but you can definitely see Defcon 2. All right, we're going to take a quick break. I hope you're enjoying this episode. I'm going to be having a free webinar coming up, the link's below, on how to correctly and with low risk, invest your IRA or 401k in really good multifamily properties. A majority of our investors do this. I do this personally. It's not illegal. Make sure you click the link below. We'd love to have you. All right, because when you see companies out there where the headlines are, they're trying to do loan workout, or if the headlines are they're limiting distributions or they're stopping distributions. It doesn't matter if you're $1 trillion company. If you're stopping distributions, that's because you have a problem. You're in Defcon 2. If you're stopping distributions, you're in Defcon 2. That is what is going on. And as an investor, okay, as a company owner or part owner, those are some things you need to be aware of. And outside of that, as an investor that is looking for purchase opportunities, now you've got a possible purchase opportunity, don't you? A possible investment opportunity. If you recognize a company is in Defcon 2, could that be an opportunity for somebody?
Yeah.
Yeah.
Well, I mean, a lot of times, let's say you're in Defcon 2. Well, your investors might get a little bit scared and they want out. And well, now you've got people that can buy in at a discount or something of that nature. There's definitely opportunity there. Granted, a lot of times it comes from somebody else not wanting to be part of it anymore of some sort, but there's definitely opportunity there. Yeah.
Yeah, there is. So not only is this helpful information in terms of, spotting things if you are an investor involved in some of these companies that could be going through this, it's very helpful information to spot opportunities that could be out there in front of you that you may want to look at trying to take advantage of. Okay, so let's wrap this episode up. We've talked about Defcon 3 in a past episode. We're in Defcon 2 now, where lender, we need your help. Partners, we need your help. Cat's out of the bag with lender and partners. Here's what we're trying to do. Here's what's going on. Hopefully we can still keep this project afloat and we can see light at the end of the tunnel, and at the end of the day come out of this just fine. But right now we're in Defcon 2. All right. And so with that, I want to thank you for joining me for this Defcon 2 episode. Trot, thanks for joining me on this. Again, if anything we've talked about here resonates you, we would love to have some dialogue with you. So make sure you leave your comments below. If you like what you listen to, click that subscribe button. Make sure you don't miss out on any future episodes of the Heartland Multifamily Show. And our next episode in this series is going to now talk about Defcon 1. I'm sure you can probably imagine what Defcon 1 is, but we're going to cover it in detail right after this.